In 2008, the stock market crashed. Lehman Brothers filed for bankruptcy, and the Dow Jones Industrial Average or DJIA plunged 1,874 points in a single day. The S&P 500 and NASDAQ Composite also suffered heavy losses. If you were caught in the crash, you probably panicked. You may have even sold your stocks at a loss and regretted it later. If you're worried about another stock market crash happening, don't be. Hello everyone, welcome to the Finance Wisdom channel. If you are new to this channel, do like and subscribe to the channel. In this video, we will talk about how to survive stock market crash and why it happened. What is a stock market crash and why does it happen? A stock market crash is a sudden and sharp decline in the prices of stocks. It is typically caused by a combination of factors, including economic news, geopolitical events, and changes in investor sentiment. While a stock market crash can devastate investors, it is also an opportunity for savvy investors to buy low and sell high. A market crash typically happens when there is an overreaction to bad news. For example, if a company misses its earnings targets, the stock price might drop sharply. However, the company may still be profitable and the stock price may eventually rebound. A market crash can also be triggered by a significant event such as a terrorist attack or a natural disaster. In these cases, the markets may rebound quickly or take longer to recover, depending on the event's severity. Either way, market crashes provide opportunities for investors willing to take on some risk. What to do during and after a stock market crash? A stock market crash can be a frightening experience, but it's essential to keep a cool head and remember that the market has experienced crashes before and always recovered. During a collision, the best things to do is to stay invested and ride it out, as trying to time the market by selling is almost impossible to do successfully. After a crash, it's also a good idea to remember that the market always recovers eventually. So don't be too discouraged if your portfolio takes a hit. Over time, the market always goes up, so your investment will likely rebound as long as you're patient. No one knows when the next stock market crash will happen, but when it does, it can be devastating for investors. Many people see their portfolio values plummet and lose a lot of money. How to protect your investments during a stock market crash? So how can you protect your investments during a stock market crash? The key is diversifying your portfolio and having a mix of different asset classes. If one asset class takes a hit, your other investments can help offset the losses. Another essential strategy is to create a cash reserve. This way, if you need to sell some investments to cover expenses or take advantage of opportunities, you won't have to sell at a loss. Finally, don't panic. It can be tempting to sell everything when the market is crashing, but in the most cases, it's best way to stay the course and ride out of the storm. Over time, the market has always recovered from crashes and gone on to new highs. Following these strategies can help protect your investments during a stock market crash. The long-term effects of a stock market crash on the economy. A stock market crash is a sudden and steep decline in stock prices. It can have a long-term economic impact, including job losses, reduces investment, and decreased consumer spending. A stock market crash can also lead to bank failures and a decrease in the currency's value. A stock market crash can cause panic and fear in the short term, but in the long time, it can have serious economic consequences. Job losses can cause a decrease in consumer spending, leading to a reduction in economic growth. A stock market crash can also lead to a decline in investment, as investors become more risk-averse and are less likely to invest in new businesses or venture capital projects. In the long run, a stock market crash can ripple and affect the entire economy. Don't forget to like and subscribe to the channel if you like this video. How to rebuild your finances after a stock market crash. A stock market crash can be a devastating event, both financially and emotionally. If you've recently experienced a collision, taking a step back and assessing the situation is essential. That doesn't mean inaction is the best course. On the contrary, there are several things you can do to begin rebuilding your finances. First, review your debt situation and develop a plan to pay off any high interest debt as quickly as possible. This will reduce the interest you're paying and free up more cash flow each month. Next, create or update your budget so you can clearly see where your money is going. This will help you make informed decisions about your spending and adjust as needed. Finally, start an emergency fund to cover unexpected expenses in the future. Even if you can only save a few dollars each week, this will help lessen the financial impact of future crises over time. Taking these steps lets you know how to survive a stock market crash. Though it may take time to recover, by taking action now fully, you can put yourself on the path to financial security. The stock market is a vital part of the economy, and its health is essential to businesses and investors' well-being. However, the stock market is also notoriously volatile and crashes can occur with little warning. What can you do to help prevent another stock market crash in the future? To help avoid another stock market crash in the future, there are a few steps that individuals can take. First, it is essential to diversify one's portfolio. This means investing in the various assets, including stocks, bonds, and commodities. This will help to protect against losses in any one particular sector. Second, it is essential to stay informed about the market's state and monitor one's investments closely. This way, if a crash does begin to look imminent, steps can be taken to sell off stocks before they lose too much value. By taking these measures, individuals can help to mitigate their risks and hopefully avoid another stock market crash. How to survive a stock market crash? A stock market crash can be scary, but if you understand what is happening and take the proper steps, you can weather the storm. One of the most important things to do is to stay calm. Keep your emotions in check. Don't make any rash decisions when it comes to selling your stocks. Take a deep breath and think about what you're doing before you make any moves. It can be tempting to sell all your stocks when the market is plunging, but that is often the worst thing you can do. You need to have a long-term perspective and remember that stock market crashes are a normal part of the business cycle. It is also essential to diversify your investments. This means investing in different types of assets such as bonds and real estate, which will not be affected by the stock market crash. Finally, as we always say, it is crucial to have an emergency fund. This will help you cover your expenses if you lose your job or have other financial problems due to the stock market crash. The market will always have its ups and downs, but by being prepared and knowing how to survive a stock market crash, you can minimize your losses and even come ahead. Stay informed and calm. It's the best way to survive a stock market crash. Thank you for watching. I hope you have learned something from this video. If you like this video, give us a like, subscribe to the channel, and comment below. Thank you and goodbye.